Beyond the transactions in Nigeria's power sector, analysts expect a pickup in mergers and acquisitions in the second half of this year, driven by market forces, but also by some regulatory changes. Right now, we speak to Babatunde Obani, Principal Associate Mergers and Acquisitions at UBA Capital, to talk us through his expectations for the second half of the year. Thank you so much, Babatunde, for joining us. I think a good place to start really is to maybe just a quick review of the first half. I think the major transaction that stands out for me is the transaction announced by UAC with a South African company investing into its logistics business. So beyond that, I think it was a pretty quiet first half. I wonder if you agree with that. So let's just talk broadly about your expectations for the second half.
All right. Good evening, Wale. We share your sentiment on the review of first half for 2013, because by the time you look at the deal size and the deal space, compared to what happened like this same time last year, you find that there's been a decrease of about 25%.
Right.
And there's so many factors that came to play for that reduction. We saw the quantitative easing that people expected from the U.S., so everybody was being cautious. I mean, the developed countries where you see the inflow of FDI coming to the emerging markets, people are just being very cautious as to what is going to happen. But aside from the UAC, I think another notable one to talk about is the Dangote cement, the 1.5% sale of the cement, because prior to now, the expectation has always been on FMCG, oil and gas, financial services. But going to manufacturing, going to cement manufacturing now confirms that we are beginning to see interest beyond those sectors that we've hitherto looked at. And on that point, I'll just go to the outlook for the year. Having started on a very quiet note, we are very bullish that the second half of the year will be better than the first half of the year. We have so many factors. First, we'd like to talk about some factors that are driving our expectation. The first one is the regulatory directives on the financial service space. First, we're talking about the mortgage banks. Right. They have a recapitalization deadline of 31st December. So that means that between now and year end, which pretty much falls within the second half we're looking at, most of these people will do deals. And from our market feelers, I mean, from people we've spoken to, we know that some of them are currently in negotiation and in talks on how to conclude on deals. Right. Also, we know that AMCON has said that he's going to put for sale 3 nationalized banks. Of course, that one is expected to be concluded sometimes in 2014, but the activity will kickstart sometime this year. So there are so many factors.
Okay, but if we just talk a bit about the insurance space, I think some people are quite disappointed that we haven't seen any deals completed just yet. There have been, of course, quite a few rumors about consolidation in that space, and the case for that is very clear. I think many of the insurance companies really need to bulk up in terms of their capacity. Do you think we'll see deals in the second half in the insurance space?
Well, I think we're going to see deals in the second half, and I will say that we hinge our argument on the industry dynamics. In as much as there is no regulatory directive of people saying you must capitalize or they must do a deal, we still strongly believe that the dynamics in the industry is reshaping to the extent that people now know that you need to be big to really play in the insurance sector. Right. For instance, prior to now, you find out that when you have to insure like oil rigs in the Niger Delta, you have to insure an aircraft. You probably need to get a reinsurance company because the insurance companies are not really capitalized. So from the emerging landscape, we strongly feel that it's imminent for them to come, to be stronger, to be able to underwrite bigger transactions, to be able to use their balance sheet to do these large-scale transactions in oil and gas, in aviation, and some other key sectors of the economy. So we strongly believe that something is going to happen also in that space for the second half of the year.
Right. If we move back to the banking space, and you mentioned the AMCON banks earlier, what about the other banks in Nigeria? Clearly, we know that First Rand has shown its interest. Unfortunately, a deal that we are hoping to close in Ghana seems to have stalled. Right, it seems to be stalled right now. But they are still showing interest in that market. But we also know that they are interested in some of the 3 banks that AMCON is willing to sell. But if you look at the banks in Nigeria, how many of them do you anticipate maybe doing deals with the AMCON banks?
We would like to be careful with the statement we make, but the one that we're certain is Skybank. I remember sometimes last month when they had their AGM, the board of directors sought the approval of the shareholders to raise 50 billion naira.
Right.
And one of the things they said they were going to do with the money is to look at one of the nationalized banks to see if they could, buy one of them and do a consolidation with that. Just to expand their balance sheet. But having said that, looking beyond the Nigerian banks, I still see a lot of foreign players wanting to take advantage of the prospect we have in the Nigerian banking sector. Our base case scenario for this year is that the sector will grow between, let's say, 15 to 20% on the best case scenario. If we are more bullish, we're expecting 25% growth. And this is, by and large, one of the best markets you have that kind of growth in banking space in Africa. Right. So we are also seeing some interest from South African companies. We're seeing from other emerging markets and even developed markets. So right. We believe that towards the end of the year, this activity is going to come to fore and people will be more aware of what's really going on in that space.
I think a sector that's quite exciting is the oil and gas space. Of course, we're seeing quite a few indigenous Nigerian companies buy off assets from some of the IOCs. Talk to us about your expectations for deal flow in that space over the next 6 months. I think that is one area that we should see some really sizable deals.
As you have rightly said, Wale, we share your sentiment. If you look at what has been happening, there's been sell-off of producing assets by the IOCs. Basically, the offshore, there's been a paradigm shift from them. They're looking more towards the deepwater offshore than the onshore. Like the one that we saw last year, the Hoando Kodoko Phillips, is a mega one for $1.8 billion.
Right.
And this year, we've also had announcement from Shell, from Chevron. Shell is selling off 2 assets. Chevron also is hoping to sell about 40% stake in OML 83 and 85, somewhere in the delta. So we believe that these activities are going to kickstart in the second half of the year, and they will shape happenings in that space for oil and gas.
Right.
And we've also seen increased appetite from the indigenous oil companies for upstream assets. No one could have thought that an Ohando could have bought an asset of $1.8 billion, but we are beginning to see them coming up to even take up this asset that's been divested by the IOCs.
But today, just on the final note, your thoughts about what these deals may mean for the stock market itself in terms of listings. Do you anticipate that we may see some transactions that would impact companies listed on the stock exchange?
Well, we don't really see much of a linkage between these activities and listing of the companies, because if we look at most of these, like you said, we're looking at oil and gas, and if you look at the barrels, we find out that on the upstream sector, maybe Ohando is a major player that is listed on the NSC. So we believe that even most of the people that signified interest in buying these assets are private companies, and we really don't see any correlation. But if you look at the bank, if you look at the financial services space, like the insurance, like the banks, where we also expect to see more activities, and even the mortgage banking sector, we expect that could possibly have some impact on the stock market as well.